today. I'm glad to have you here. Can you tell us a little bit about who you are, your experience in real estate, what you hear, your experience with it?
Oh, sure, Pedro. Thank you very much for having me. It's my honor to be here. So, I'm a real estate investor. I invest in long-term rental properties. I've been doing that for over 20 years. I've been mostly acquiring properties through the BRRRR method, even though when I got started, there was no acronym quite yet. That's how long ago it was, but that's how I acquire most of my properties. Now, also, I'm a loan officer that does residential mortgages. So I'm actually in an industry, my regular W-2 job, that helps me be a better real estate investor. So I have two jobs that are around real estate, and both of them help complement each other.
Great. Why do you think that real estate investment it's a good option versus other investments opportunities that might be out there? What makes real estate so special?
Oh, yeah. Okay. So, I can make a case for other investment platforms, right? I can buy a stock for $5. It's hard to buy a piece of real estate for $5. So, I have investments in multiple different platforms, but the vast majority of my investments are in real estate because I can multiply my money in a better way. So when I'm doing the BRRRR method, I come out of pocket a small amount, but I have big returns. If I buy stocks, I have to rely on those stocks appreciating or giving me dividends, which is fine, and I do that. But I get to multiply and leverage my money with real estate, which is hard to do in other platforms. Even if real estate does go down, let's say it went to zero. Today, all my properties are worth zero. Well, I still have real estate. It's still there. It's physical. And I can go live in it if I want to, or have other people live in it still because it's a physical asset. If my stock goes to zero, well, I'm out. That's another benefit for me too.
When did you start it with real estate investment, and has it always been profitable?
Okay. These are very good questions. All right. So I started with real estate buying my own primary home. So my own primary home I purchased with a down payment assistance program. The house was $50,000. That's it, 50 grand. But I house hacked. That's the terminology we use today. I rented out the other rooms. So it wasn't even a duplex or a quad. It was a single family home, and I rented out each room while I lived in it. And then after I moved out, I continued to rent per room that home. So it was my first primary home, and it was my first rental property at the same time. Now, has real estate always been profitable? I guess, let me give another story here. One of the properties that I purchased in 2008. And if you know anything about 2008, it's the worst time in the history of mankind to buy property. And I did it. I bought it during that. Now, this is, I bought properties during 9/11, during the housing crisis, and I'm even buying them today. Today's a little challenging, too. That home that I purchased in 2008, I paid $132,000. That's it, $132,000 for it. And then every year, I just got hammered over and over again about the value going down, just being crushed.
At that
5 years.
Was it a good deal for you, or why did you decide to buy that?
Yeah. Okay. So, my wife and I toured this neighborhood. It was a new build. We toured this neighborhood in 2007. And in 2007, they were selling them for $175,000. So in 2008, the builder called us. Hey, we had financing fall through. Hindsight, I wonder why. We'll sell this property to you for $135,000. Like, hey, and we actually settled on $132,000. So we got them down. So to us, the exact conversation that my wife and I had was like, hey, we know property values are going down. It won't go down much more, right? Probably not. Wrong. Dead wrong. We were so wrong. But we still held that property for 15 years. When did we lose money? We didn't, because we held on to it. It's long-term real estate. It's not a get-rich-quick scheme. And if there is some bumps in the road along the way, you just hold your property longer until it's fine. And that's what we did.
But so on that time, when you bought it, and then the next year you see that it goes down in value, and then the next year it goes down, does it affect you emotionally? I mean, what, or were you always ready and prepared to hold it long term, and you knew that it was going to recover, and you were just positive about it? How did you feel on that initial years, being that this was your initial investment, or was it not?
Oh, yeah, it was one of the first ones that I had, okay? So my first one was in 2001 or 2000, somewhere in there. But the main case when we purchased this home was that we came out of pocket zero. So no down payment. Yeah, it was all sorts of crazy loans then. So no down payment. And then our intention was to keep it for a long time. That was always the intention. So if I look back on that property now, it was in an HOA. It was a 2-bedroom home. Probably shouldn't have bought that anyway. But, we didn't know what we were doing the first few years. So maybe we did everything wrong, but we still were okay in the end. We still are fine on that property. So was there an emotional stress to it? There was so many things going on in the economy, man. We didn't really pay that much attention to it. The one thing I'll say is that real estate, we have a 5,000-year history of. People have always needed a place to live. Even if the property value goes down, if you have a long-term outlook, you're going to be all right.
Understood. Now, for you as an investor, how can you compare whether to go for properties that will generate passive income versus properties that you're looking more at as a long-term investment? Do you compare those? Do you invest to rent, or is it just invest to hope that the value will appreciate?
Okay. I might be saying something very controversial here, Pedro, but I will share with you my viewpoint on this. So when I got started back in like 2000, 2001, 2002, 2003, 4, 5, all the interest rates were 7 and 8% then. Nobody cash flowed. Cash flow was not a conversation. You knew going into it, you were not going to cash flow. So the intention in the beginning when I got started was, this is a long-term appreciation piece of investing. So to this day, I still look at it that way. I make money 3 ways. 3, whenever I buy a long-term rental, on the appreciation of the asset, on the principal buy down. Yes, I make money when the principal is paid down every month. The tenant pays it. I make equity, which I turn into income. And then the third thing is cash flow. And cash flow is the smallest piece. It's the smallest piece. If I had a $250,000 home and I had cash flow for $200 a month over 5 years, that's $12,000. On a $250,000 home, I'm paying the mortgage down $18,000. Nobody talks about it in that way, though. I know how it's, I see the same videos online. It's sexy to get cash flow. Sit back and relax and collect mailbox money. Doesn't that sound great? Buy my program, and it does sound good, but the reality of it is we make hundreds of thousands of dollars a year, and it's not on cash flow.